All right, good morning, everybody. I want to start with this article before we get too deep. There's the brokers are always monitoring what kind of trading is going on, and they share that data amongst each other. It's not like they look at your account and say, oh, look, hey, Bobby's over here doing this trading and his account's this size. But they do keep track of the trading that's going on. And one of the things that really showing up right now is the difference between what the institutions are doing and what the retail traders are doing. There's a really great article that was on Bloomberg that talks about how retail traders during the March lows of 2020, the COVID lows, was buying like crazy and caught that rally up off of the lows, while the institutions really missed a large part of it. But they've got restriction criteria that kind of stops them from participating depending on what kind of firm they are. Right now, those same institutions who are handicapped by the regulations of the firms that they work for are not able to really buy these lows, even though a lot of markets are showing that they're, quote, oversold or in buy territory or are considered cheap. So they're not buying, they're continuing to sell. And we've seen a really beautiful example of that yesterday when the market started to rally up off of that lows. They usually try to make it a little more subtle than what we saw yesterday, but the institutions took that as a welcoming sign to sell into that, and they just dumped, and we went right back down again. They're holding on to an absolute amazing amount of risk still, and they're continuing to sell the rip, not buy the dip. Retail buyers, on the other hand, are continuing to buy like crazy for the 9th straight week. We just continue to pile more money and more money and more money into this market along these lows. Now, they nailed it back in 2020. Whether that is a different market or the outcome is going to be different kind of remains to be seen. But just to have a little bit of perspective of some of the craziness that you've been seeing in the market, retail traders are continuing to buy these lows, and they're the only ones, right? Because most of the institutions are just, they're handicapped. They're not allowed due to their risk metrics to get in at these levels, right? And that's not speculation. We literally can go in and check through this article. They point out where their data comes from. You can go in and check it yourself. This is on Bloomberg. So just wanted to share that with you guys, kind of bring up a little bit of background on what it is that you're seeing out there. Janet Yellen made a comment yesterday, and there was a leak about the White House's approach to Bitcoin regulation. We've seen a tremendous move last night in Bitcoin. Just absolutely phenomenal run. Probably going to want to look at sympathy names off of that crypto list that we talked about before. Those will probably be something to keep an eye on today. So we're still watching the conflict. Russia now has started to discuss sanctioning the people that are sanctioning it, and made an offhanded comment about there will be retaliation to any nation that turns away a Russian boat. So there's that on the table now for countries that are participating in the embargo and not letting Russian ships dock. The threat is getting a little deeper. It's still going to be news based at this point. There are plenty of opportunities and there are swing trade setups, but we want to approach with absolute caution and just keep the profit targets on the low end. In the overnight hours, the overseas markets are doing good. The European session continues to rally as we get closer to the open. If you go to TD Ameritrade, Fidelity, Schwab, any of them, they will have something similar to this. It's an overnight look, global equities, commodities, currencies, fixed income. They usually have some connection to CFRA reports. They'll give you a really great heads up of what's going on in the market and provide analyst upgrades, analyst downgrades, revisions, and then anticipation of the day's economic events. Almost every single major broker that I could name has something like this. So it doesn't matter if you have TD Ameritrade, you can go to IBKR, E-Trade, Schwab. It doesn't matter. The reason that they put this together is because you are what they want, right? You're the commodity that they're all fighting over. So that each one of them continues to develop new tools and programs and news releases and products like this to get you to stay at their company rather than going to some other company. They'll also do complete breakdowns in the sectors and the industries. They'll give you evening reviews, and you see the market's making moves during the day and you're trying to figure out what caused that move. A lot of times you can come in and find a review of the day, kind of what moved the market review. It's really helpful when you're trying to work backwards and figure out what caused a move. And it's free. You got to love free. It's better than coupons. Yeah. So we've got jolts, often referred to as take this job and shove it. Then the EIA and the 10-year. 10, 10:30, and 1 o'clock. Now, I got to admit, the 10:30, the petroleum status report is normally something we don't pay too much attention to. Um, Not today, right? Today, you're going to want to be really keeping an eye on that. Watch the market reaction to this report today. Be on your toes. Don't sleep on this like we normally would. USO very often correlates with X steel when it comes to oil and steel. They are sisters in so many ways. I've worked in both industries, 20 years in the oil field, 10 years in the steel industry. Don't don't let this one get by you today. Definitely keep your eye on it. This 10-year auction should not interfere with our 0 day today, right? We didn't take one Monday because we had economic events all the way up to 3 o'clock. There was no window that opened up that made it appropriate to be able to take a 0 day with the size that I would have wanted to trade. So we didn't do it. But this one will be done by 1 o'clock. Whatever we're going to get out of it, we'll get. That opens the door for an afternoon 0 day. Those targets, my 0 day targets have been $1,000 days, just one trade, put it on, get it done, less than 2 hours. And today's not going to be any different. So this afternoon, kind of be looking for those posts. I usually put them in the large caps, telling you guys what it is that I'm focused on before I take it, what working order that I'm working on before it's filled. That way you're not getting it all after the fact. So we do got some higher lows. It's a good start. But we got this major downtrend. We are completely inside of yesterday's price action. So at the very least, yesterday's high is going to be the focus for the upside move. Should we get through yesterday's high, we've got the 10-day moving average right above that. It's very close to the 4,300 area. That's a significant moving average. It's going to be very difficult to get through that. You definitely want to have it plotted on your chart today, because if we hit it, there's very likely going to be a reaction to it, right? So you're going to want to know where that is at. If you are on a broker that does not allow you to put your daily moving averages on your intraday chart, just go out to the daily time frame and use your drawing tool and draw a line where the 10-day is, and then come back into your lower time frame. It's a little generic, but it works, right? It's close enough. So really keep your eye on that 10-day today. To the downside, we've got the floor pivot. That puts us right around that cluster before the for the breakout, the run in the kill zone. The kill zone is between 2 and 4. So that puts us right back down to the floor pivot. Should we get through that, we'll deal with the open of the Globex and then the daily low. Now we're up a significant amount, 1.6%, but we've got an ADR of 2.6. So the market could continue to make another 1% move to the upside, and it wouldn't even be considered an abnormal move at this point, right? We're talking about seeing the market making a move that would just barely get it above yesterday's high. So that's what another 1% move would get us from our current location. If we're up 1.6 and we add another 1%, that would give us our ADR of 2.6. And that gets us just above the daily high. Should we break this Globex high, that would be the target that I would aim for. It's worth noting where all the volume is at. So right now we're in a volume cluster. We're right at the value area low, right? You can see there's a gold line at the top and a gold line at the bottom. Value area high and low, and the point of control. So we're at the very bottom of the box. We're back inside the box, which is what we expect when we've left the box, right? We come back in. We've got to get through this volume area first. So we're at a significant area of resistance. And once we get through that, things begin to get shallow. We've got some resistance near yesterday's high. Then it shallows back up again until near that 4,300 area. So everything that we were just talking about before we came to this chart is confirmed by this chart, right? It's one way to follow up and look back at the things that you were just looking at and add some context to it. We don't have any point of controls to bring forward that haven't already been hit. So from the day-to-day volume profile perspective, there are no virgin points of control to bring forward. Every one of them's been hit. It's a lot of the same thing with the Nasdaq. We've got to get through yesterday's high. That's going to be a significant level of resistance. And if we do that, we have Monday's high, which ties in really close to that 10-day moving average. it's in reach. We've got an ADR of 3.5%, and we're only up 2%. So we've got another 1.5 that we could go for. A 1.5% move puts us right around 13,750. That is the open from Sunday night. So that would be my line in the sand for an upside move. It would be getting back to the open of Sunday night. You know, where that cup happens to be, right there. Got a reasonably decent flag forming here. Should we break to the downside, we're going to re-challenge that floor pivot of yesterday. Then we'll face the open of the Globex, and we'll go down towards that daily low of yesterday. It's a round number, 13,100, and it's a significant level. So we're looking at a 3.5% move to get down to the daily low of yesterday. Things start getting nasty. That's what we're going to focus on. So clear levels. We're inside of yesterday's price, which is very likely to become, uh, just a regular range day at this point. There's a significant amount of room on either side of this range, and it's unlikely that we're going to make it outside of it without some news to get us there, right? Which means it won't be subtle if we do start moving through and breaking out of yesterday's price action. You'll be able to see it. Starts to show up in the advancing issues. It'll start showing up in the cumulative tick. You will need the assistance of the FANG names, and you'll have the backing of the risk on sectors, technology, and finance. So if we really start moving in that direction, you'll be able to confirm it through all of those different pieces. The safe haven assets or the global hedge in gold had a significant change event last night. Same thing with oil. A serious backing off in the oil market. Again, we've got that petroleum status report today. So you really want to keep your eye on this. For a lot of those energy names that are really, really high right now, and those minerals and mining names, something like a broken wing butterfly or a risk twist spread trade would fit really nice there. That way, if it continues to go up, you don't lose money because it puts you into the flat side of the trade, and you'll end up getting enough credit to pay the commissions and not lose. On the other hand, if it happens to dump hard to the downside, it's an unlimited spread on the downside. So it's not like a typical vertical that caps your profit. It's unlimited profit. So the more it falls, the more you'd make. It's a nice trade. It takes up a lot of buying power reduction to put on a risk twist, but considering that those energy names, a lot of them are less than $100 that we're focused on, then it's not that bad. A typical risk twist spread in something like SPY takes around $2,000 of buying power reduction. So, cut those numbers in half for something around that $100 mark. Bonds continue to sell off. Doesn't quite make too much sense. So we definitely want to be keeping our eye on the bonds, what's going on over there, and in the dollar. Right? Right now, we want to see the dollar and the VIX decouple from each other. We got to keep our eye on these bonds and make sure we don't get a significant change here to the upside. There is that critical level. So let's see if it's still on. And we've been underneath it. So a move back up would be a good thing at this point. We want to really keep those bonds above the 156 and be a line in the sand to keep your eye on today. If we start to get below the 156, I think it's likely to cause a significant change in the financials. So the financial names, I'd stick with your top three: JP Morgan, Bank of America, and Wells Fargo. And by top three, I mean top three by market weight, right? There's nothing better or worse or significant about those three. When looking at the XLF, they're just the largest in the market cap, unless you want to mess with Berkshire Hathaway. And I don't like that thing's options, right? So I usually just skip that one. Besides, it's a little pricey. All right, so we're looking at the S&P 500, but we don't want 500 names. Change it to pre-market. Use the filter, knock it down to near 100 names. It's not always an easy thing to do. 92 is good enough. And we got to adjust it because we got a lot of gray in there. It's just a color scheme adjustment. We go from whole numbers to decimal points. It kind of brings everything into a little better focus. You see a lot of the FANG names this morning: Facebook, Google, Microsoft, and Apple. They're all pressing above 2%. They're all pressing above 2%. Should things start to turn around, this will be a perfect target. Short those suckers. Apple did have its Apple event yesterday, and everything seems to have kicked off really nice. New products, new phone, new pad, kind of coming out with that chip, putting that chip into more of their products. So really interesting background on that. I wouldn't sleep on that. These names right now would be my focus. If we start to roll over in any way at all these names that are up 2.5, 2.25%, that'd be the place to go. I would not be interested in going long in these names, especially after they're already up this much, not this morning. So speaking of those financials, there are a few names that really don't have much going on in there, but otherwise we're looking at 2%, near 2% across the board. It's always tech and finance, right? Risk on markets. So this would be the two that I would aim for. Financials are often cheaper to play with on an intraday basis. So they may be your better bet if you're running in a smaller account. But technology is likely to make bigger moves. So, it's got a larger beta offer. So for this one, we swap it over to the Nasdaq 100, put it on pre-market change. We don't need the filter because we're already at 100 names. Want to adjust the color scheme. You can see that Tesla still got the carryover. That move in nickel yesterday was a phenomenal move. And the article started coming out right away about how nickel and these other precious metals are going to directly affect the bottom line of these EV markets. Because, with the cost of nickel being at what it was during that spike, if that's the new normal, then, the cost of the car that they could produce after paying that much money for the nickel would just be outrageous, right? They wouldn't be able to sell the vehicle at that cost. it's going to be really interesting to see how long it takes before those kind of numbers start to bleed through. Another one of the FANG names, NVIDIA, is up almost 3.5% this morning. The chip sector, Intel, AMD, Qualcomm, MU, that thing is just screaming for a short. So names in the pre-market, names that are down at least 1%. Those defensive names, Lockheed Martin, and then energy names. It makes sense. They're the ones that rallied the most in the last few days. Let's swap it over and start looking at names that are up instead of the names that are down. So Nasdaq 100, names that are up at least 1% this morning. We have 61. So 61% of the Nasdaq is up this morning, more than 1%. That's a bullish level. Yeah, Victor, this is live. Your heat map very likely wasn't changed for pre-market change percent. So you got to go in there and change that, or you're going to be looking at yesterday's data. Warlewe. And TD Ameritrade does not do very good with pre-market stuff. All right. So if you're wanting to get ready for your trading day, you're going to have to use modified Thinkorswim tools or find a different product to look at pre-market stuff. So the NASDAQ, 61%. That's a pretty good number. It's a very bullish number. What you do want to be aware of, or what you want to be careful of, and it was actually something we had talked about yesterday in class, is those mornings where we come into the open and we're at the highest point of the Globex, and we open and rally for a good 30 minutes before the market rolls over and just dumps for the rest of the day. It primes up or it tees up just like this, just like one of these mornings where you've got 60% of the indexes up more than 1% and everybody's bullish and everything is exuberant. And we get that pop at the open, just enough for the banks to sell into it, roll it over and dump it down on retailers' heads. Right? So just approach this open with caution, and you're not going to really want to take longs in a move in something like Ford or Nvidia that are already up over 3%, or Nike that's up over 4% this morning. It's not a good time to go long at the open in a market that's already up 4%. Now we know that it can go another 4%, right? We've seen it before where you get some blowout runaway market and Nike moves 12% on the day. Yeah, I mean, it can happen. Just approach it with caution. You're very likely not going to see much more of a rally in names that are up this much. And remember how we started this morning talking about the difference right now between what retailers are doing and what the banks are doing. They're continuing to sell the rip, while retailers are continuing for the 9th week in a row to buy the dip. I would revisit these numbers as we get closer to the open, make sure that we're still holding this much exuberance as we come in. We really want to keep an eye on when you're in here. It's not just individual names, it's what names are up, what sector, what industry, what peer group do they belong in, and are there any opportunities for something that maybe isn't up so high, right? So taking Netflix for an example, streaming service, what other streaming services could I look at, and are any of them up as much as this one? Do they offer an opportunity for a trade, right? So it's kind of looking at it from a bigger picture. If you think about the funnel, kind of our job or our goal in the morning, we've got 600 names that have weekly options, and you're trying to get all of that funneled down until you have nothing more than, say, 3 or 4 names as you come into the open. So you just, each layer that you put on strips away more and more and more names until you've got just your top 3, maybe 4. If you've been doing this for a while, you could easily watch 4 names into the open. I find the less names, the better. Kind of have your backup names so that if something stalls, you can just swap over and start looking at another set of charts. This is a day where the sectors will absolutely come into play. So it's not one of those mornings where I say we're going to have to be stock pickers and really run our watch lists. We can absolutely run the sectors on a day like this, but I wouldn't activate any alpha protocol play today. We're not correlated enough for that yet. If you're going to run the alpha protocol, you got to have plus 90% plus, right? So when you go in look at the AD, you would see advancing issues greater than 90%. Because remember, on the alpha protocol, you're buying every name on the list. So looking at the sectors this morning, mostly risk off is what's down in the negative. USO, XLE, the energy names, XOP, and other energy names, the devil's metal, bonds, real estate. But the risk on sectors are all lit up, looking really good, and emerging markets too, which is how we kind of gauge that global participation. Now, sectors that don't fit into that S&P old school legacy 11 sector box list, man, every single chip name is just lit up. Yeah, ASML is looking really good this morning. I think I know what I'm going to be focused on. And NVIDIA is up over 4%. Oh, yeah. So we're looking for an inside day breakout fail on NVIDIA. It peeked its head above it once already and then came back down. It's already starting to get a little bit violent. That 225 looks like a nice rejection level. So chips are looking good for reversal plays. Bring in the crypto names. We already talked about why the crypto popped last night. They retracted her statement or pulled it down. Interesting enough, at least that's what Bloomberg said, that the statement was pulled down or taken down. And even the pot stocks are up this morning. So, every single additional sector that we would look at are all lit. And basically, we're just looking at a reversal, kind of a capital rotation from everything that had been doing good versus everything that had been doing bad and flipping it all over, right? So your energy names, gold, silver. There was a really good article last night that I was reading about airlines and trying to repossess airlines. And Russia grabbed a bunch of airlines and brought them back into their country and said, we're not paying. Go away. So the repo man can't get the airline back, can't get the airplanes back. And apparently an airplane is worthless if you don't have all of the documents showing all of the maintenance and all of the upkeep. And it just destroys the value of the aircraft. So it's not necessarily the airlines that I would be focusing in on that. It would be who's holding the bag, who's holding the notes for those loans that are now going to have to run a bunch of defaults. because they can't get their airline back, or that they get it back, but they don't get the paperwork with it. And it's a worthless aircraft that doesn't have any of its value. It's something to maybe dig into a little bit deeper. So that's what I got for you guys. Be careful this morning. Be safe. I will be streaming in the large caps. We're going to be focused on those financials and tech names, probably looking for reversal plays, not continuation. But I'll see you all there.